guys, my name is Chris, and I am the Algo Man here on TikTok. Welcome to today's recap for October 2nd, 2025. Can you believe it, guys? It's already the second day of October. It's amazing how fast time goes by. But all right, guys, today we're flipping the script. Instead of doing a typical playback recap, I'm actually stepping back to introduce something brand new, something I've been working on behind the scenes that I think you're going to love. I'm calling it Volat, okay, short for volatility, which is our new volatility indicator right here on the screen, guys. And it's designed to detect micro spikes in volatility on the 1 minute chart, all right? So I'm going to show you today exactly how that works. Now, you know those moments, guys, where you're trading and all of a sudden price just stalls, where everything suddenly compresses and then flips hard? That's volatility exhaustion for you. And the 1 minute chart is where those spikes show up first, long before you catch them on the 5 or even the 15-minute chart. So with Volat, capturing those key inflection points in real time is key so that you're not left reacting late. That's exactly what we're going to be showcasing today, okay? So I'm going to walk you through the whole process of how this works. I'm not going to do the replay because there's so much on the 1 minute time frame that it would just really take away from being able to focus on what I need to show you guys today. So I'm going to walk you through exactly how this tool works. It's not yet released, but it's going to be released as soon as I get approval from NinjaTrader, okay? And also there's just one design element that I want to share with you guys as well that I need your feedback on. So I'm going to ask for your vote on something important, and we'll get to that in just a moment, okay? So this tool right here is really simple. Let me bring it up here in the thing right here. Here we go, guys, okay? So there are two customizable thresholds that are built into the tool. You got the upper and you got the lower threshold, okay? And it's really simple, guys. This upper threshold right here, this is your distance from normal volatility. It's basically your distance from normal volatility marker. That's what it is. So, for example, if normal volatility is 1 and you've got this threshold set at 1.65, then any move nearly 1.6 times X larger than average will typically trigger a signal, okay? This is where price often exhausts. Think of it like the final push before the engine stalls, if you would, okay? These are prime areas for potential reversals, especially if you're seeing divergence on other tools. And let me walk you through the process of how this works, okay? Because this is the key to understanding this new tool that's very soon going to be part of your arsenal, okay? So here's today's market on the NASDAQ 100, and this is on a 1 minute chart, all right, guys? So here you've got, I'll just leave the crosshairs on. Why not? Sure. Here you've got the tool set at 1.65x of what normal volatility is. And normal volatility in this case, yeah, these are futures, would be at 1x right here. Now you can tell right off the bat with this huge bar going up that volatility clearly went all the way up. And the moment it came down, and you can tell right here for about 3 bars, it was just flat, okay? Right here, it came right back up. It picked up speed again. It kind of died down a little bit, picked up speed, and that was the end of this whole move. So there was a lot of swing in the market right here in the morning as this happened, okay? Right here, you had a little peak to the upside in volatility right above 1.65, which means that volatility was almost twice what normal volatility is. And look what happens when this happens, okay? So you're going to see this spike right here. Price just begins to kind of waffle along and do nothing. So what we're going to look at is we're going to look at a lot of these spikes throughout this process. And that's the reason I don't want to play it back, because imagine it would just be like stop and go all the way through, right? So nonsense with that. Let's just go through it step by step so you guys can get some value out of this, okay? So here we go. This is what this is aiming to capture right here. You see these drawdowns where all of a sudden price is going up and all of a sudden, boom, look at the size of this wick right here, guys. This is like, holy moly, what's going to happen? Is this really going to take off, or is it going to stall and perhaps slinky back the way it did right here? Okay. And this is exactly what it does. Look, it helps you spot. Okay, this is a little slightly above average volatility, guys. Nothing happens. It doesn't continue going down. Price stalls, it goes sideways, and then starts just kind of trickling up again right there. We've got another episode right here. Let me show you. This is another really good one where price is just falling. Okay, it's a nice little sell-off right there. And all of a sudden, you reach 1.65 times volatility right there. Okay, and what happens? Okay. Price stalls. Look at this. There's no more continuation. It just goes sideways right here. If you could tell, just price went sideways. This is where volatility peaked. That's what this tool is telling you. It's measuring, it's giving you context. It's not a signal for you to enter the trade, exit the trade. It's giving you context as to how far has volatility moved away from normal volatility where price is likely to stall. Think of it as the engine stalling, okay? And that's exactly what happened right here with this move to the downside. And let me show you some other examples right here as well. You had a slight move above 1.15 standard volatility right here, okay? Came down, continued going up, and it finished. This is all normal volatility right here. If it's above this threshold, it's normal volatility. It kind of peaked and it continued above. That's normal right there. This isn't normal right here, guys. It begins to fall. And look at the size of that wick. Came all the way down and boom, it nailed it. These are the type of moves that normally cause price to reverse. You see that? And here's another one right here for you as well. Okay. You see the size of this wick right here? And we've seen these type of moves a lot where I tell you if the bar is moving fast, chances are the bar is going to stall out on you. Well, now you have a tool to measure that stall right here with the volatility indicator, okay? And it perfectly nails the stall of the price. And if you saw this, you would know that there's likely not going to be continuation of the move. And look what happens. Price just kind of stalls and goes sideways, and then it begins, the moment that volatility goes up again, it begins moving up, okay? And we've got a lot more examples right here. Here's another one right there, okay? Prices kind of waffled along, and then boom, down. Anyone who's been waiting all this time for some price move, if you saw this dip to the bottom, you're going to say, hey, I'm going to chase and go after that trade. Well, this right here is telling you that this trade's probably not going to go anywhere. And what happens? It just reverses right there, okay? And you've got some more examples right here as well to the upside, okay? Prices kind of waffles along and you spike. And look at this spike right here, guys. Perfectly caught the spike to the upside right there, you see? So this tells you don't chase, okay? Chances are that you're going to have some type of reversal, and this is not going to maybe end up going in the way that you initially thought. Just because it went up 3 bars and it spiked doesn't necessarily mean that it's going to continue its trajectory. And sure enough, it doesn't. It does an about face and continues coming down, okay? So this right here would give you cause for concern in wanting to chase this bar to the upside right there, all right? Here's another one right here to the upside. Price goes up really nice, and the moment it kind of hits the peak right there, it just stalls. Look at this. Price goes sideways. Now, eventually it does recover and go up, okay? And when it goes up, it comes back up right here, and this is the bottom, of this move as well. So you've got that. You've got another one right here where it kind of bottoms out, hits the peak, comes right back up, hits this peak right there, goes sideways before it actually continues moving up, okay? These are inflection points that are very important in the process of trading. And here we've got a nice one because the market towards the end of the day today sold off right there for a few bars and volatility creeped up. This is telling you that the move is probably going to die. And sure enough, look at this. It just goes sideways right there. Here's another peak where you had extreme volatility. Look at the size of that wick. Boy, that thing just went up, went all the way down. Wasn't sure exactly which way it wanted to go. 10 minutes into the close of the cash market right there. And you see a nice little peak in volatility as well. You see another one right here at the bottom, and you see another one right here at the top. And that's the entire session right there for you, okay? Now, that's one way to use normalized volatility, okay? This versus peaks. This indicator has two modes. One mode is hypersensitive and the other mode is normal, okay? If I flip this bad boy over to normal right here and I remove high sensitivity, you're gonna see how different it looks, okay? It's a little bit less spiky along the way, and it's a little bit flat. You know, right here it tells you that volatility is picking up, and it kind of goes up and it picks this trade up nice. It's not gonna signal these peaks, and that's what high sensitivity does. High sensitivity creates a peak right here to let you know when volatility is peaking. This really just captures normal volatility as normal volatility is picking up and kind of moving right along, okay? For example, this move right here to the upside moved with normal volatility, whereas this move right here moved up with less than normal volatility to the upside, okay? So there's two modes that you can use this for in picking up the right signal given the context of what you're trying to capture in the spectrum. And that's really super important, okay? Now, that's the volatility side of the equation right there, all right? I told you that this had two tuning parameters, and that's the upper threshold right there that we just discussed right now. It also has a lower threshold right there that I've got set to 0.32 right there. Now, the bottom threshold is your consolidation detector. And you can customize this to reflect where you typically see chop, okay? And that's really trader choice right there as far as what number that you decide to place right here, okay? If volatility dips below this level, the indicator signal turns red. And that basically signals to stay out. It tells you that there's low energy. It's letting you know that that is a choppy zone and that these are areas where you want to hold back and let the market do its thing until volatility returns, all right? So let me kind of illustrate to you how that works in both scenarios, okay? So right here, for example, let me just kind of go back to the start of the day. You can see that the moment that this price line just kind of came down right here, it is really super flat right there, okay? And it kind of smooths it out really nice. And you can see a lot of areas right here whenever it goes down below this threshold that these aren't areas that you typically would want to start placing any trades, okay? Like right here, it's telling you that there is no movement at all, that volatility is low, and it might be, you know, a good time to kind of step to the side and not really do anything, right? Right here, all this, look at this. Okay, now you can set this as well to hypersensitive, and you can see the difference in both views right there. You see, this one kind of gets you in a little bit early right there, and then it kind of keeps you in until it actually comes out, and volatility starts to increase as this trade starts to develop right here in this region. Okay, so there's two ways that you can set it, and it's user dependent on how much and where you kind of see the inflection points in price when this moves up, and where you want to spot your consolidation zones right there, depending on the time frame that you're looking at, okay? Now, here's where I need your input, all right? And I really do need your input on this one, guys, okay? Because this is going to be important in the process of finalizing this tool for you. So, if you notice, the tool color is actually green, and it changes red whenever it goes above the upper threshold that you set, and it changes red whenever it goes below the lower threshold right here. So here's the question I have for you. Should I leave the red line on the chart when it crosses above or below the threshold? Or should I keep it all green for simplicity? You know, I'll tell you, color coding indicators is always a little tricky, especially on the 1 minute chart. So, I'm testing it live and I want your feedback. So let me know in the comments, keep it red or keep it green only. And whatever you decide will shape the final version of the Volat indicator before we ship. So we'll take a moment right now and you guys let me know. So drop it in the comment box so I can read, okay? And we can also take a poll on the red. Okay, so Test says red, red. John says red as well. Keep the color. Okay, Robert Jackson says red. Okay. Well, so far, no one's told me to keep it green, so it looks like you guys like red. Alrighty, so I got, let me see, I've got 1, 2, 3, 4 people that voted that they want red. Anybody else? Maybe a 5th person? Do you want me to keep it? Okay. You guys like the red and green or just the green? Just one more vote. Red. Okay, perfect then. So we will go with that. Could you keep a green and when it goes to trade, and red when it's not? Yeah, so that's essentially what it's doing right there. It's turning red whenever it crosses above the threshold and whenever it crosses below the threshold right there. Okay, Mr. Pip said red as well, and so did Samba Barbie. So, okay. So you guys like the red and green, so we'll go ahead and leave it there the way I have it. So thanks, guys. Appreciate your help in that. Sometimes as a developer, I might get stuck with, a quirky thing like that, but it means a lot. And I know it means a lot to you guys. So I'll go ahead and leave it that way. So we could make sure it changes color whenever it changes here. So yes, the way you change it is you adjust your threshold. So if this threshold right here was higher, it would remain green the whole duration of the move right there. So for example, if keep your eyes on this right here. Look, you see how it's red? Okay. Now, if I go to the threshold and I say, instead of 1.65 times normal volatility, I want it to exceed 2. You see how it turned green right there? And it actually turned red right when it touched. Okay. So you can adjust when the colors change by adjusting the threshold right here. Okay, let me just put it back at 1.65 and you'll see it turn red again. You see that? And that's how you adjust the threshold there for you. Okay, so I'll go ahead and leave it there like that. Now, let me talk about something else that's really cool about this. Okay, and before I do that, let me just say this loud and clear. Okay, we're gonna go ahead and pair this with Predictmo right now, so you can see how well they pair. But let me just say this loud and clear. This Volat indicator does not replace Predictmo. It amplifies. You can think of Predictmo as the directional trigger and Volat right here as your tactical timing filter on fast-moving charts like the 1 minute. And by the way, Predictmo is now available as a standalone indicator, guys. That's right. No bundle required. Just click the link in my bio and grab it now. We call it Predictmo, the prop firm killer. So I thought that was a cool name, so it stuck. And yes, traders are using it to pass funded challenges left and right. I am getting a ton of emails on my Telegram with people telling me, "Oh, look, I passed it." We have a new guy who's been using this. He's had back-to-back winning days. He's been posting very good screenshots of his success over on Discord. So that's been really heartwarming to see. Could you show us how it prints on the chart? Yeah, exactly the way it does here. Yeah, it's going to be free. This is going to be a free tool that we're gonna launch. Oh, before I forget, guys, let me go ahead and plot Predictmo on here. And I'm going to kind of walk you through how this whole thing works. Okay, so here we go. All right, guys, here is Predictmo right there on the chart. All right, so if we go back to the start of the day right here, you'll see when volatility was really super high right there. The moment that Predictmo crosses below the 0 line, that's telling you that that is game over, guys. You know that this is going to fall as soon as the volatility calculation ends. So you may as well just get out right there. Now, Predictmo is designed to capture, the way I have it right here, to capture the short to medium wave swing in price. Okay, it's not tuned to capture the momentum swing in price. So if you notice, when price started to sell off right there in the morning, the predictor, price line came down right here below the 0 line right there, okay, and continued down all the way here. But the predictor kind of stood flush going horizontal here with the price line. And the reason why it's because it's not designed to capture the momentum swing in price. If you want to capture this, you use a tool like Pirmo right here, guys. Look at this, okay? And Pirmo does a really good job. And this is just the purple line in Pirmo capturing the swing in price all the way down to the end right here. Look at that. From here all the way to here, okay? Does an excellent job catching that. And so if you want a tool to capture momentum, Pirmo is a tool that you need to have in your arsenal, okay? What's the name of the indicator again? No, it's not available on TradingView. It's only available on the NinjaTrader platform. So let me get rid of Pirmo. We can come back to that later if you guys want to see it, but let's focus on PredictMo because we're focusing on how to use this tool to really time the move. So let's say, for example, you saw Pirmo going down right here and you said, well, I'm going to see if I can take that to the short side right here on this swing to the bottom, and you saw this bad boy hit this, you can almost guarantee yourself that this is going to be your exit right there. Why? Because volatility just hit almost two times what normal volatility is right there, guys. And when that happens, price just stalls and moves, doesn't move in continuation form right there. The engine stalls. So this is it. This is your exit right here without a shadow of a doubt. You don't have to wait for the line to cross zero. As long as it crosses above the green line, you're done. That's it. Game over. Let's look at another example right here. Here's another really good one right here. So let's say, for example, you saw, prices going down, 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 down. You see this bad boy go down right there, and you're waiting for the second rotation right there. Yeah, sure, you can get out right there, which would have been at this bar, but the moment it hits, look at this. The moment it hits after this nice sell-off right there, this is telling you that it's game over, guys. Price is going to stall. You don't have to wait for this thing to cross over right there, because the moment it kinks down, you're going to be at this bar. And even though the rotation hasn't completed itself, the rotation would complete at this bar. You're getting out at this bar, and you're saving a lot of profit, without, price having to revert on you like that. So it's telling you that the game is over right there. Volatility has peaked, and this is likely, and you can tighten this up, of course, to get out exactly at this bar, but then, you would do that at the expense of creating more noise with the indicator, okay? Let me just kind of go, oh, here's another one. Right here, it peaks, and the moment it peaks right there, boom, that's it, guys. You can just get out right there, and you're done. Let's go to some other extreme points. Here's another example where it peaks, and you've got almost the same scenario where price is going down right there, and instead of waiting for the reversal, you can just get out right there and be done with that trade, okay? Here's another example right there, okay, where it peaks, and the predictor is coming down. So instead of, waiting for this thing to cross above zero, which would have been at this bar, you get out right there and you're done. Okay, you're done. There's nothing else left there. Here's another one right here where it peaks. Well, no, this one didn't peak right there. Sorry, right there. It peaks, and you've got the predictor right there coming down. So instead of waiting for it to cross above zero, you can get out and call it a day and clip it and move on to the next opportunity, okay? Let's go to some other extremes right here. Okay, here we go. This is a really good one right here, because this right here peaked, and the moment it peaked, the predictor crossed zero. That is it. There's nothing else left in the trade. You get out of it. So it's a complementary tool to PredictMo to really help you gauge where you're supposed to get out. Right there, you got another peak, and the moment it crosses zero, right there, you're at that bar, you are done, okay? And you're crossing zero because you're so close to zero. It's only one bar away, so you may as well wait for that, okay? You got another one right here. Nice peak in volatility. Moment it crosses zero right there, you are done. There's nothing else left in the trade, guys. And, and the whole thing kind of repeats itself right there. Like, you've got a spike in volatility as price starts to drop, and the moment it crosses zero, right there, which is at this bar, you're done. There's nothing else left in the trade. Same thing with this, okay? You get a nice big peak in volatility, and the moment it crosses with the with the green line right there, you're done, which is pretty much at this line going to the downside right there. And so you can go on and on and on and on. Here, price peaked and it crossed below the zero line, and you'd get out right there at that bar. There's nothing else left in the trade. What else do you want, right? So that's how you use this. It's designed to be a complementary tool to really go in and extract money from the market and identify areas where, where volatility is exhausted the price move already. Okay, so that's super, super important right there. Okay, guys? Hold on a second. I've got a couple of, I don't know, maybe I got a few questions here, and I'll stop because I'm not playing this in recap mode. No, so this indicator is actually going to be a free indicator that's going to be available to our members. And, I wanted to bring it here to show you guys how it works and have you guys check it out and see, and just see it, okay, right here on the chart with no noise or anything else, okay? What are the chop rules when it's below the red threshold? You stay out. That's the rule. You stay out of the game. So for example, like right here, okay, when it goes down into the chop zone, you just stay out. These are areas when you don't trade because volatility is absent and price is probably likely not going to move in your favor. So that's really the rule right there. A member of what? Member of the Simo Pro family of indicators. So if you want more details, you can click the link in the bio and you'll get access to the tools free for 7 days. And if you decide to become a member of the tribe, then you'll get the volatility indicator as part of your pack. That simple. Yeah, so you basically set your own thresholds, silent noise, as far as where you see price moving, where you don't want to be in a trade, okay? And every one of these charts has a very unique characteristic as far as where price moves, but the best place to see consolidation and to spot volatility are on the lower time frame charts, especially the 1 minute time frame right here. You can really, really get sharp in capturing these peaks when volatility kind of moves up, okay? Now remember, this is not a signal. This is a context filter. It's letting you know where volatility is relative to normal volatility, okay? It's telling you the likelihood of price potentially getting exhausted with the move, and you're using your Predicmo indicator or Scalpmo or Simo to time the exit of the trade, okay? So if you saw price, doing this type of move and volatility was all the way up here and Predicmo crossed the zero line, there's no way you're going to take this to the upside. You're going to get out of that trade and say, hey, I'm calling it a day. Likewise, if price drops all the way down here below the threshold, you can call that consolidation and not trade any of this noise where price really isn't going to move in your favor. So that's the idea behind that right there in the design of how it was constructed. What's the difference between the three types of programs that you now have? Each of these tools captures a different component of the market swing. So Simo is designed to track the momentum swing in price relative to the cycle component in price. So it's designed to track market structure with precision, okay? Then you have the dynamic VWAP, which is designed to let you know where the market is and what phase of the market you're in, whether the market is cycling or trending. It kind of spots that out really simple. And then you've got PureMo, and that's designed to only capture the pure momentum swing in price. And that's the tool that I showed you guys that caught this a little while ago when I came on real quick. Then you got Scalpmo, and Scalpmo is designed to capture the acceleration rate in price, and it's good for scalpers. And so this tool right here, it's designed to spot areas of excess volatility and areas of no volatility like this, okay? And if you can tell right here, there was zero volatility. It just came down and it was flat, 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 flat. There was no volatility, whereas here you had excess volatility above normal. And so this is what this tool is designed to do. And it's designed to really be a complementary tool to some of the other tools that we have in our arsenal. Now look, guys, if you're still trying to trade this market with indicators from 2012, If you're still getting chopped up and missing rotations and chasing late entries, you're not going to fix that by watching more YouTube videos. You fix that with better tools. So try Predictable for free for 7 days. You can click the link in my bio and stop over trading and start executing. Guys, you'll have this other tool, the Volat indicator, in your arsenal, hopefully at some point next week, okay? So no more excuses. It's the fourth quarter of the year already, second day of October. I mean, boy, this year's going quick, guys. The clock's ticking, all right? It's time to really take action and try to end off the year on a strong note if you're really serious about taking your trading to the next level, okay? These tools are all designed, guys, to give you an edge to try to make better sense of the market when you're in it. Now, this tool here, by the way, guys, is not the indicator that I've been working on for some time. I got another super awesome tool that I've been working on, and right now I'm still in the process of polishing it and testing it and kind of working out some design flaws that I found in it. But this indicator for the meantime right now is a context tool, and I think it'll just be a good addition to your arsenal, just in the same way that we rolled out the dynamic VWAP. So I'm pretty excited about it. Now that you guys want red and green, I'll keep it that way. But it is a really good tool. And then remember, it's got two modes. What you're looking at right here on the chart is hypersensitive, okay? So it's really super sensitive to changes in volatility. And then you've got the regular mode that's not as sensitive to changes in volatility. So let me just show you how that looks. If I take that off right there, I plot that, it's right there. You see that? And it really captures volatility really good. It captures when it kind of wanes, which is right here. Look at this. It goes soft and boom, the moment it picks up right there, and it comes all the way down and it ends. There you go. You got two different versions of the tool right there that you can use to give you more context on what it is you're looking to do when you trade.